Good morning, traders, and welcome to the Bookmap live trading webinar today with Scott Pulcini. As you guys know, Scott Pulcini is a futures trader. We do this every Thursday at 10 a.m. This is all part of the Bookmap education that you get this every Thursday. And the whole concept here is that we have an educational course on order flow. Then we have the follow-up to that every Monday, Tuesday, and Friday, where we go through that course content in the live market so you can apply what you've learned. And then you've got two different traders. You've got Jay Trader, a stocks trader, on Wednesday, and Scott Pulcini, a futures trader, on Thursday, to go through the way that they're looking at the market. We also have Tom B going through volume profile in the afternoon and the way that he trades order flow and looks at volume profile together with Bookmap. So we really offer a pretty complete education here. It's all free. We hope you enjoy it. Let's continue on. And you guys know who Scott is. I've got his contact information here. He does offer educational services. I'll be putting this into the chat if you want to reach out to him. And then we got to go through the risk disclosures here. So please listen. This is important. This is all for educational purposes. All right. So general disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only, and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, with that said, let's turn it over to Scott, and let's get going here. Scott, can you hear me?
Yep, you hear me?
Yes.
NQ Iceberg by NQ, 154 contracts.
All right.
NQ Iceberg by NQ, 151 contracts.
Stuff is hitting the fan. I don't want to swear, but see here, this is actually a delayed double whammy. Just had a stop run not too long ago, about 160 something, and then now you get some bias here. So these markets, you know, short-term trading, you can see here on my lug, I use Ludwig levels. We are at support, the blue lug support, which is very powerful. But you know, I will buy this because I'm a day trader, but this is not looking positive at all. Like, we may get a bounce, and you're better off. You know, I can understand not wanting to buy this. We've been talking about this in my room for, especially yesterday after the Fed met, and my exact quote was, if we broke this, you know, we had this up move and then down move and then rejection, and we did up here, came up here to the zone, and I said, whatever, you know, way this breaks above these tails is going to be the next big move, and this is not good for the markets. Like you can see, this is a daily level. I'll show you in a little bit, but this was all, you know, based on structure. Before the Fed, we were talking about this as well. You had balance area, we tried to break down, built more balance, broke out of that balance, got to the high volume node, and that should have done that. Instead, we messed around after the Fed, and now we're below this latest one that we broke out. So that's a failed breakout. That's a failed breakout. This is coming down to probably zero today. Just kidding, but it's not going to be pretty. That on top of, that's the wrong one. The internals just getting smoked again. So I think, like, I was on vacation last week. Of course, I missed a 10% down move because that's how I roll when I leave. That's when the markets actually start trading. But we've had like 3 or 4 out of 5 days, you know, just ridiculous extreme. I think Monday or Tuesday, we were like minus 2,900 on the ADD, minus 2,000. If you get near 2,000, that's a trend down day. Then this is just ridiculous. This is like capitulation type of trade. But So the point is, when you see the ADD this low, must very wise to just wait for bounces to short them, right? So just keep that in mind. I may take it long on this webinar, but this is not looking bullish whatsoever. That's NASDAQ, ES looks the exact same as far as in deep water. What I really want is, I don't even care about catching along there. I just love a bounce back to maybe this zone to get short, and then you should see a monster move. I may just do it right now, but I'm hoping that it just does its usual screw you move first. Screw all the shorts and then go. But so I was contemplating shorting this. These were two stop runs earlier in ES, back to back. You can see them down here. There was like total over 1,000. You had this yellow zone and the white zone. Technically, I'm supposed to short this below the yellow because we're below the yellow lug. Short it aggressively at an ATR. The problem is we're so close to the blue lug. I want to be careful. You can see here. So if I short this ATR currently, so I use the 5-minute ATR, so it's 9.27 points. That helps me gauge the volatility and judge my zone. So if I'm shorting that basically 10 points below here, that means I'm getting in at 75. Well, the blue lug is at 62. So yeah, that is 13 points, but my risk reward isn't good, right? Because if I get in 10 points below here, so if I'm in at 75, I've got a risk. I mean, I can do it off this latest zone, I guess, but that would still be 10 points. The way I trade is I get an ATR outside of the zone, so I don't get algoed on the nonsense move. So I make the market prove it can get back through the zone and an ATR above there. So my stop would be right around 01. So I'm risking, 25 points to make 13. That is not how you want to trade. You want to be risking 13 to make 25, right? So I'm not going to take this particular trade, even though I think we can, especially with this volume setup, I do think we can move straight to the blue lug. And I know what guys are saying, like, well, I'll just short it and I'll put my stop right here. We talk about this every single week, every single day in my trade room. You cannot just place these arbitrary stop area prices based on what you want to lose or don't want to lose. The market doesn't care what you want to lose. The market cares about volume areas. So if you want to not be algoed, you need to be placing your stops above the structure of the volume event, right? So yeah, I could go short here, and I could, if this comes down into 75, which would be 10 points below here, a little more than the ATR, it's 9.27 right now. Yeah, I could get lucky and it could just drill right down to the 63 blue lug, but most likely it'll do this in just random area because there's nothing really going on here, as you can see, and I'm going to get stopped out. If so many traders just put on their trade like, I only want to risk 5 points. Again, the market doesn't care. You want to risk 5 points, and you're very, very likely, especially with a 9 ATR, to get stopped out, anywhere within even 9 points. So if you put it in, you're like, oh, I want to risk 10 points, you're still very likely to get stopped out. So you got to judge, risk reward when you're putting in your trades. The one trade I did miss because I had to get up from my chair at the time. This was a good trade. This was large sell ice in Russell RTY, and we're below the yellow lug, as you can see here. So I could have been aggressive on this one. So I should have been shorting this technically. The ATR is 44, so 44 ticks below the zone. I should have been in this trade. I had to jump up, and that was costly. But so that's 38, 34. So I should have been short right here. Hold on one second, guys.
We lost you, Scott.
Yeah, sorry, I had to say goodbye to my daughter. She's playing in a golf tournament. Wish her good luck. Anyway, I should have been in right around here, and that's a very good profit. That's a over 100 tick profit that I would have had. But it is what it is. There's going to be many more opportunities in this market today. So what it was also we talked about yesterday in my trade room after the Fed. Like usually the Fed comes out. The big money comes to play the day after the Fed. So you can expect some decent trade today would be my guess. All right, so these markets are just getting smoked, obviously. The other metric that I watch for is this edge product. So all this is showing you is the S&P 500 stocks, every stock that comprises the S&P 500, whether they're above or below their TAS 5-minute boxes, which are like little mini market profiles. So when you get this thing extended, like you can see at the open, we were extended and it kind of just hung here, and now we're pulling back. But you want to be very careful initiating shorts or longs if the shorts if the red is above the 67% line, or if the longs if the green is above it, just because you're going to get this reversion type of trade. So I keep an eye on this. So say if I wanted to short right now, I wouldn't be too worried. It's at 62%, but if this pops back up to 85 and then we get a volume signal, I will take long because it's way oversold and we're probably due for a little bit of a bounce here, even though again the internals are extremely bearish. Any bounces are probably going to be very short-lived, so you better be ready. You better find an area to be getting out of your longs, because I don't see some sustained up move, on any bounces. But I think we're, pretty due for some kind of bounce here. You got to be careful doing that too, right? The market's not due for anything. The market can keep going down and keep going down and keep going down, right? I mean, I'm going by, watching these markets for 20 plus years and what I expect, but you just got to be very careful doing that, and you just got to that's why we're using these volume setups to tell us, right? So yeah, we should get a bounce here pretty soon, but it doesn't mean it has to bounce. So you got so many traders that will just blindly buy something like right here because it should bounce. Well, that's not the way to trade. Let the volume setups tell you. So if it's gonna bounce, you should be seeing a bullish setup come in, like buy ice or another stop run. Again, stop run's not really real selling. So if you get another sell stop run and then it just kind of sits and starts to reject, well, that's telling you that we're probably going to get the bounce. But just blindly buying here because you think something's going to happen, that is a recipe for disaster. So, did we get an ATR below here? Let's see, we got down to 76. The top of this, the bottom of the zone is 84 or 84.75. So. Did not get a full 9+ points below here. Again, ATR is 9.11. So, again, if the blue lug wasn't so close here, I would short this right about here. So, but the blue lug is right here. That's not worth what I have to risk if I put that trade on. So I'm going to remove myself from that market for right now. Actually, I forgot to draw this. First and foremost, let's see if we built new lugs in here. That'll be very important. Yeah, so you see we just built new lugs. Actually, I should be going short this right now. Hold on. So this is the most recent setup that I did not draw because I've been chirping. Let's get that drawn. So we had the stop run, and then we had this buy ice pretty much in the same area. See the spike. Make sure you get all the bubbles in when you draw your zones for the spike. It's coming into blue to determine. So technically I'm supposed to be short this, an ATR just outside an ATR below her. So 36 is your, or 34.56 is the ATR. So I will short this. I think I can put on 2. We'll check here in a second. The bottom of the zone is 32. So we're gonna go a little outside an ATR. So 40 would put us at 92. Below 95. So we'll go like 38 points below here. So I will short this right there. So now I have to figure out my risk, right? So if I'm shorting this basically 38 points below her because I'm getting a little bit outside of an ATR. We've changed it, right? Before I was 70% of an ATR, then 80, then 90, and I kept getting ticks. So now I'm outside the ATR, and it's been going much better. Where I'm making the market proven because you have these algos that will rip it back at an ATR from the volume event, right? So if you get outside of it, then you're usually pretty good to go. So. For this risk of this trade, I have to risk, I'm obviously getting in 38 points below the bottom of this blue zone, right? And then if I get filled, then I'm risking, then I have to pull my stop 38 points above this zone, right? So that's 38, 38, 76, and then you have another, so it looks like, 10 points. So that's 86 points of risk I will take on this trade. I'm willing to do that because the volatility is telling me we could, move at least that, if not double or triple that, right? Especially in this condition, right? Like this market is in the middle Like this is the next area down here. That's wrong. Hold on. Sure. This is the next area down, 11,000, right? So if this gets rolling, I'm basically risking 80 points to make 100 and close to 150. That's the trade you want to make. You don't want to be risking 80 points to make 40, that type of thing, right? Excuse me. So we're actually right now we're starting to bounce a little bit. So, but that did not get an ATR below there of this newest setup. So technically, I can also go long on this setup because it has not been disqualified as a long setup because we never got an ATR below here. So that's the way I trade these, right? So I determine what the setup is based on if the market is able to get an ATR above or below it, right? So we never got an ATR below there, right? So this is still intact for a potential bullish setup. Now for me to take a long in this situation, because we're below the new yellow lug, I'll show you that in a second, I need to see a full ATR, so 36 points or whatever it is, I'll check here in a second, or retest a failure, and then I can go long. The short, I can be aggressive because we're below the yellow lug. That's the way I trade it, right? So I use the lugs obviously pretty extensively, but you can see we're hovering below this. So if this moves below this, there's a volume setup right in here. I'll take that aggressively. To go long, since we're below the yellow lug, I need to see a full ATR from that ice zone that I just drew, a retest failure, then I'll go long, right? And that's just from experience and using these lugs and the volume areas and everything else. The best scenario here for a short would be a rally back to the bottom of this 2-day market profile composite, anywhere in here, which would be pretty, let's see where that is on here. Kind of no man's land. So this would be a good area to short, but if we get up to this red lug, I would still short it. Get in this market condition. That's what the ideal short is going to be. Not chasing this market down, wait for a rally, and then watch it get hammered. Because of the structure I just showed you, because of these internals, like you want to be very careful buying and then trying to hold, thinking you're going to get some huge move up, because it's going to be probably very short-lived. So. All right, get this other stuff set up here. I got that 95. Oh, I want to make sure I have the right. So what did I say? 85 points of risk. So I come to my risk calculator, my account value. So I want to only be risking about 1.5 to 2% of my risk. You should as well. So if I go to 85 points, it's going to tell me how much I could be putting on. So you can see I could put on a 2-lot, right? So very, very important. I'm not going to rant today, hopefully, about that, but if you're not trading the correct size, position size for your account, you're going to blow out eventually. You may get lucky for a while, you may even get lucky and run it up, but there's a high percentage chance you're going to blow out your account. So that is the number one thing. Before understanding anything about trading, you need to understand your risk and what you can risk and what you can't, as far as your account size.
Yeah, Scott, it's kind of funny. We can kind of verify that by looking at this new liquidation indicator for the crypto markets, and Binance Futures is a leveraged, crypto exchange, and it has like by far the most liquidations than the other exchanges. It's just people. It just shows you people don't know how to manage a leveraged account.
Right, well, especially in crypto, because you have a lot of you see commercials on TV to trade crypto, right? It's like you got a lot of these, all these like the retail trader, not even retail, they're not even retail traders, they're like mom and pops that have no idea and don't know markets at all. That all they see for the last 5 years and how it's just eat free money to get into crypto trading and buy Bitcoin and everything else. So they all jump in there. They're over leveraged and they have no idea what they're doing, and then they puke. So I've been trying to avoid watching that because again, I don't want to be up all night every night. It's really hard to do at age 50. But that's got to be a way better indicator than even the stop runs in here, just because you see where they have to liquidate. And that's probably it. The smart money gets these uneducated traders to liquidate, and then it just turns around. And I would bet it's a great reversal signal. I don't know if you've been watching it. Is
Oh
that
yeah,
correct?
I mean it goes right. I mean it's uncanny. Yeah.
See, this is why I have to look at it because when Bruce, I'm talking to the audience now, when Bruce starts talking like that, like in extremes, like if you hear extreme vocabulary words for him, it's the real deal, right? So I tell the story every time I'm on here. You know, when he was telling me about the SI indicator a couple years ago, he was talking about the CME MBO. They didn't have the SI indicator yet, but or they were just building it. But he kept telling me about the CME MBO data, and he was like doing backflips when he would talk. It's like you got to see this thing. It's unbelievable. It's incredible. And I'm like, okay, yeah, I'll look at it eventually. And then when I finally did, it changed my whole trading style, right? Because it's the most powerful thing I've ever seen, as I say every single time. So my point is, when you hear Bruce talking like that, you might want to check it out. All right, so we're still no fill here. We still haven't got an ATR below this latest zone, this blue zone. You know, again, these two zones are pretty much on top of each other. You had the stop run and the buy ice that we just talked about. So I'm just waiting to see what happens here. The other thing you want to notice is, let's see, well, there's only one band of liquidity down here, which isn't too far from my order. Remember, liquidity is almost always magnets, so it's not meaning you want to look at this as support. You want to look at it as the market is heading to that liquidity. See here, Russell, same thing. Didn't quite get down there. I would love one more chance since I missed this trade. I'd love one more chance here, retest failure, and then I would still take that short and watch it go right into that. That's probably exactly what's going to happen. Let's check out this here. Yes, never got an official ATR below these two stop runs either. Or this latest stop run, that's the white one. That never got a full ATR either. So these are still intact for a bullish type setup, right? Because we did not get an ATR below here. So I will still play full ATR retest failure to the long side on this trade as well, or in this market as well. The reason I'm going to do that is because we're still below the yellow look. That's why I'm not going to take that long aggressively. And I really don't want to be long, but I could see, because we all know, if you've been trading this for any length of time, you know these markets, they'll do some screw you move, pop up, maybe rip up to here, make all the shorts puke, and then it'll turn around by the end of the day and sell off like 100 points. So that's exactly what it's looking like it may do, but we'll see. And then you just want to come up with if-then scenarios, right? It's like you come up with your scenarios, and then when you get the volume in that direction, that just gives you more conviction, and you can actually trade a little bigger if you get a lot of stuff aligned. The way your thesis for the day, and then certain areas, and you get everything aligned, and then you get the volume, which is the main driver. Right? It's the main driver of all markets, and it's the main driver of my trading. You get that in the same direction, and then that gives you the confidence to put on the trade. And then the other great thing about the volume, it allows you to understand the area that's important for your stops, right? So I understand if this market, this is ES again, if this market gets above this latest stop run, right? Again, they were two. You can make this one big zone if you want, which would probably be advised. Let me just show you what this is here. This was all this stuff here. You had stop run here, 750. Then you had another at 527 and another 430. So that's that white zone. So the white zone, there's over 900 stops, but you can incorporate both. Forgot what I was saying before that, but the point is you want to, you can determine your risk, right? So this is the volume event. This is what you want to trade off of. So if I end up getting long, I know the market should not get back below this volume event. If it does, then I'm wrong, and I reset and wait for my next trade. But this is another thing this allows you to do, is understand where to put your stops, just like we were talking about. Most traders will get long right here, and they'll put their stop right here because they don't want to lose more than 4 points. Well, you can almost guarantee this market will algo, around in here. What you want to make it do or see is show it can get an ATR below here, right? That's the key. So that's another thing that you can really control your risk and know where you're wrong with your idea. All right, so this is the bounce that I was expecting, but it's not bounce much yet. We're still not out of these zones, so still waiting to do something here. So this was something right at the open, this other zone here. So this is 300 ice here. This zone here that's obviously broken ice. So I get this question all the time. They're like, well, when can you, so say we came back up into this zone here, right? That's this big ice right there. All right, they're like, well, would you still trade that zone? In certain circumstances, you could. I usually default to the most recent setup, which is this one, right? That's this blue zone, right? So you want to be careful trading old zones. The same as if you're looking at an important, so say like on the bar chart, right? And you're looking at this zone that I drew. It's important. We can go over a little bit why it's important. There was a bunch of stuff even before, but it was still important. I mean, yesterday. But say we come up here and we do this. This zone's not important anymore, right? The same with the SI indicator. In the setups, this was passed. You don't want to put a lot of weight on it. Many times it will come back to a prior zone and fail, but where I will play a prior zone if it led to directional conviction. So basically a straight beeline move out of there, right? So that was up at 11,275. I wouldn't consider this. That's basically, it's not bad. You could, especially, and you also want to judge the size too. So if the size of the SI, so that was like 400 ice, you could trade that based on the size, and it did lead to. I don't really consider this directional conviction, right? This is like a little bit of a move, and then it's been kind of chopping its way down, and now. So you could trade that prior zone based on the size. I'm not going to myself. But I'm going to try to find another example of, sure we can find. So like this, right? This is natural gas the other day. So if you had, and there was like 1,000 buy ice up here. We still haven't retested it, but this is directional conviction, right? See this? That's directional conviction. So say this was the same day. Say you got a bunch. So there was like literally 1,000 sell ice right up in here. You can go back and replay the day. That's another great feature of Bookmap. You can go back and replay the days with all the setups, practice, figure out where the big areas were. You probably want to replay this day to go see this ice area because we have not retested it yet. But say we're in the same day, we come down here, you get a setup, you get a setup, you get a setup, and then we come back. Would I take that trade? Yes, because this. First of all, the size of the area, like we were just talking about, was huge. It was 1,000 buy ice. Threshold for natural gas is 150, so it was almost 10 times the threshold. Then that area led to this huge move. So I absolutely would trade that first retest, right? So that's when you can trade prior zones. I get that question all the time. All right, just waiting for something to happen here. Any questions, Bruce?
No, I think we're pretty much caught up. Yeah, so regarding Scott's spreadsheet there, you need to be part of his room to get that. We get this question.
That's one of the perks of my room. I get that all the time too. That's a perk of my room. I mean, you could probably find them on the internet somewhere, but that's a perk of my room. And traders in my room have worked on it and updated it and made it better too. So that's like, again, part of the room. All right, so this is struggling. I still think I'm gonna get filled here. What I do like about this short is now this edge is not it's not anywhere near oversold anymore. You see how this is pulling back, so it's looking more ranging. So 40% of the S&P stocks, and actually we'll take a look at the NASDAQ because that's what I have that order set up in. It's driving me crazy, it's a tick strike. But you can see I can go to the NASDAQ here. Hold on, let's move this over. So it has NASDAQ, Dow, and S&P. So this isn't as pulled back as much, but it's still not overbought. And you can see all it is showing you the 100 NASDAQ stocks that comprise the NASDAQ, and it's showing you what percentage are above their 5-minute TAS boxes, or in the middle, or above. And you say, what are TAS 5-minute boxes? Well, it's a calculation. I don't know exactly what it is, but they're just mini market profiles. So just imagine. So you see this, and they draw all the time, especially on a 5-minute time frame. Right, so here's the ES, here's its TAS 5-minute box. This is resistance, this is support, this is the point of control. Just imagine little mini market profiles. It's just basing it on the range. So it's basically just drawing boxes based on ranges. That's what it's doing, right? So when you see extremes, so say it's like the green is way above that 66% line. Well, then that means out of all the stocks that comprise the S&P 500, over 66% are way above their current 5-minute TAS boxes. And then many, almost always, especially the more extreme it gets, you get a reversion back until it'll draw new boxes. But that's what this is. This is what this is gauge. That's what the edge is gauging, are these 5-minute TAS boxes. Just imagine these boxes for 500 stocks, and that's what it's gauging. Very useful where you're not chasing markets. I don't trade off that exclusively, even though we've seen some last couple of days of my trading, we've seen some incredible trades like yesterday at the close, or before the close. I actually didn't take it because I don't like to make free money, but it was like right here. We were up here, there was a stop run, it was a little lower. We popped up here into the red lug, and the edge was at 95% overbought. I mean, that was just literally free money. So that's you can use it in a vacuum, but I don't use it in a vacuum very often. I want to see my volume setups, and then a lug in conjunction. But I keep an eye on it, so I'm not shorting like into the hole, right? If that thing's way oversold, I'm not going to short. My point is, it's not oversold right now, so I'm not afraid to get filled on this order right now, is what I'm saying, if we do swipe down here. All right, so a whole lot of nothing going on. Once again, like I said, maybe should I go out of town again tonight so you guys can get another 10% move down, because that's exactly what happened last week. And I've been waiting for this thing to get killed forever, and then I leave, and then it finally starts to get, I think it's just beginning, but speaking of which, let's look at some of these areas since nothing's going on. Let's get this here. So NASDAQ, this is a daily, and I think this is right where we're headed, probably today. You can see here, nothing on the hourly, because it's been years since we've been down this low. This is the daily here. Get this thing. I gotta adjust this. It never saves the settings for some reason. So let's look at 5 years. So you can see is this the daily? What was I looking at earlier? Oh, I drew this one earlier. This still looks different from when hold on. And this is an important area, but I could have swore I drew. It must have been in the ES that I drew it, but this is balance area. Remember, these are daily, so this is like months of balance, right? Two-sided trade. We broke out of here. Here's your retest of what? High volume node. That move left. That led to the eventual straight-up move that we've never returned until probably today. Right? So you want to keep an eye, you want to know these areas, and you want to come in here and draw them on a daily time frame, and then obviously hourly for the shorter term stuff. But this is, you had two buying tails, and then this move led to this entire up move. So this, you're very, very likely, one, to get down here today with the ADD this low, two, to get a bounce. So, if you're rolling and you're short, this thing gets down here, be very careful trying to short until it can prove it can get through this zone. Like in this area is where you want to short. When it gets down here, we're probably going to get some kind of bounce. So, if I am getting short, I'm going to be looking at this as one of my main targets, right? It looks like I'm about to get short here. Pretty close. Just make sure this ATR is only 35, so here you go. Just want to see what this is. You see the tick opened up. I don't remember seeing 18. It was minus 1800 today. I don't remember seeing minus 1800 ever. like if you get minus 1000, that's extreme. We've opened up at minus 1800. So we're headed back down here again. Again, this is NYSE tick. ADD is at minus 2600. VIX isn't doing much. That's the one thing that is interesting. You would think you would see this VIX just ripping off the page, right? I think it'd be up here. It's not, so that's interesting. But we'll see what happens here. All right, you can fill me anytime now. But this is why I have this outside an ATR, right? Because you get these algos that it gets an ATR away from the volume event, and then they'll snap it back, right? So put it just outside of an ATR. Now, it's not worth that. I was trying to save a few points here and there when I was 70%, 80%, 90% of an ATR, so it's just not worth it. So I've gone outside. You can see I avoided a potential losing fill there. So I'm confident if this gets filled, then this, not that I'm going to get out of this liquidity, but I'm pretty confident we're going to continue to sell off. But we'll see. Let's look at ES here. Nothing doing, just hanging out in these zones, waiting for the collapse. Russell, of course, won't go retest that zone for me, make me feel better so I can put on the trade. Again, I should have just shorted this when it came back to the original area, but I didn't. So remember I said I'd have been in short. Actually, it didn't get up there. So I said I'd have been short right around here. I never got back there. So I'll just wait for a retest because we may get it bounce here first. So, all right, other markets you want to pay attention to since nothing's going on. This is crude. I was actually looking for this. I really hope I didn't miss a trade here. I was looking for a move into this zone. I caught this short yesterday. We talked about this at length in the room pre-market. When we go over our markets, we were talking about this balance area here and how this zone was really, really important. This zone, directional conviction, huge directional conviction. And you can see it bounced around here. And then when it finally gave it up, right? So, and then we were talking about this balance here, and so if we got below here, the next area down was here, and that's exactly where we came. All right, I'm filled on the NASDAQ. I'll come back to that. Hopefully I didn't short right into the bounce that I've been waiting for. So let's see. All right, so trade is on. ATR is 35.71. So I'm going to go a little outside that. I'm trading off of this zone here, this blue zone. Right, so I'm putting my stop a little outside, so I'll go like 38 points above this zone for my stop out. So that is, so 40 is 83, 81.50 is where I will stop out of this trade. The one thing I don't like is I'll be stepping out right in the middle of this zone, but I'm not going to risk another 40 points to put it above this zone, so I'll just put it right. All right, so the trade's on. Let's see if we can get a swipe down to that zone I was just showing you guys, and or blue lug. I think they're probably the same. So you're coming up to baby lug here. So, you know, if you're short, I don't trade baby lugs by themselves. These are just minor lugs. These are the major ones, right? The red and the blue, but you have these baby ones too. I don't usually trade. I won't get out of them unless they're confluent with something, like a market profile, composite area, point of control, something like that. Or say this baby lug was down here. I mean, the blue lug's down here, but you want to be careful at extreme standard deviations from VWAP because you get these algos that as soon as it gets there, it'll rip it the other way if there's no big money coming through. Like if it's just the trade is dead, and there's no real money, you know, firms, funds pushing the market, you'll get that. So if I get this baby lug and it was at like minus 2.5 standard deviation, I would probably get out of one. But right now, I'm not going to get out of this. Doesn't mean it couldn't bounce from here, but I'm not going to get out of one here. Obviously, as well, I just put on a trade right here, so I'm not getting in a trade risking 160 or 90 points to make 10, right? So that's my decision. So, all right. Shockingly, this liquidity got filled. That's the name of the game. This is the big money. The big money always gets what they want eventually, and I talk about this all the time. You know, these markets are 100% manipulated by the people that can push the markets around, that have the size to do it, right? And you can complain about it and bitch about it and you say it's impossible, or you can, if you can't beat them, join them. Say it all the time, right? And how does that work? Well, because you can see what they're doing, right? The big money rarely, I mean, you can see the liquidity here, but when they're initiating positions, they rarely will just start market buying and or throwing huge orders in the order book, right? Because they know these algos. If someone dropped in 1,000 here, the algos would just run it away for them. They would see the order. That's what icebergs are. They're hidden orders, so the big money can get filled, right? So you can see what they're doing. Join them, right? That's the whole premise behind everything that I'm doing. And then you can also see what the retail trader's doing when they puke. That's good information as well. Most stop runs are retail traders. That was, hold on something. All right, now we're short. So the other market I was going to short I was considering, but it just wasn't worth the risk. I would be filled on this ES, but again, the blue lug's like at 62. I think we're going straight there, but it's not worth 13 point, risking 26 points to make 13 based on the current ATR. So I did not short this market. The other market that I said I missed, should have been short here. You can bet your bottom dollar this big money will get their fills. So. Doesn't mean it's just going to stop here, but a lot of times the liquidity get filled. If it struggles to get through there, it'll rip the other way. So you can use this as one of your trade, one of the variables in your trade plan. You guys should all have trade plans. You should be building, we call them playbooks, and this could be one of them. I get out. I wait to see what it does with liquidity. If it gets through there and it gets back above, then I'm out of one of my contracts, right? But you can't just randomly be doing stuff. One day you got to do it, or one day you do it, another day you don't. It's part of your trade plan. Every time you do the same thing, that's how you make money. If you guys want to make money trading, you have to trade like an algo because that's what you're competing against. It's not this random field trade. Trust me, I used to be obviously a 100% field trader, watching the order book and flipping contracts all day long, right? I tell my room all the time, like my intuition, my gut feeling now is usually exactly opposite. That's why I have a system that I rely on where I'm not just trading by my gut because it doesn't work. These algos will kill you.
NQ stock sell NQ.
This is perfect.
282 contracts.
It's perfect because now I can trail my stop because it's a new event, right? So I get out at major lugs and or opposing setups. This isn't an opposing setup yet, but it could be, right? So I draw the zone. This is what's the sweeps indicator, which I highly recommend you get. I think it's Global Plus you need, but it's well worth it because it helps you draw your zones like right away. You see, I can see it. This is where this all started. You can see, by the way, this tick strike, they're just hammering this market, right? So I also want to keep an eye. I just back oversold here, so, but I'll come back to that in a second. First and foremost, what I can do now is completely cut down my risk. So the ATR is currently 33.79. So I'm going to go a little bit outside that. So I'm going to say 40 points is 02. Let's go 38 points again. So I'm out at 11,200. All right, so that's like 38 points because I want to go a little bit outside the ATR. So instead of having my stop at, you can see the difference here. Look at that. So I go from having my stop at basically 11,280. So I just saved myself 80 points of risk because of this new setup. Because if this turns into, this was a stop run, right? If this turns into a dumb and dumber, meaning just the retail trader puke, no real selling behind it, because stop runs are not real selling, it's guys puking, and that's the beauty of knowing, right, of what the actual selling is. If you're just looking at a bar chart, this looks like a sell to you. You have no idea that it was just a puke, right? So this could easily fail, and then this is a bullish setup, and that's why I'd be out, right? This is why this information is the most important thing you can have in your trading. If you're just staring at this, you have absolutely no idea what is behind this move. You're like, wow, they're still hammering this thing. Yeah, we're going to zero. We're going down to this zone. Yeah, I'm in. This could turn into a stop and hold. Here's your setup. This could sit here. It doesn't mean every time the retail trader, you see a stop run, it's instant rejection. Many times the big money comes in behind it and pushes it. But that's the only way this is going to continue down if you get real selling behind this. Otherwise, it's going to do that. My point is, if you're just staring at this, you have no idea what just happened here. You just see red bars. You're like, okay, yeah, this is working out perfect. If this fails and does that, guys are like, well, what the hell? What happened there? Well, what happened there is this is not real selling. This is a puke. This is stop run, right? So this is two of my setups are Dumb and Dumber, which means the dumb money puke, the retail trader. Again, don't get offended. I'm a retail trader too, say it every time. But that means there's no real selling, and it does that. Or a stop and hold. Because you don't think the big money sees this as well. They see these stop runs, and if they want to step on the gas, this is just like their initiation. They're like, okay, puke, now we're gonna step on it, and then they push it down. And that's not happening yet, right? So this could easily turn into a Dumb and Dumber. Hoping it doesn't. But the other thing that I was going to just point out is this is a little scary here. One of those because I actually mistake there, put on too many on my other account. If you look at this edge, look at the NASDAQ. This is what I watch, right? Look at that, 84% oversold. So this is very likely to be bouncing here very, very shortly. So I want to be very careful. I mean, my stop's in, but I want to try to make something on this, so I may just get out of one just because of that. I just want to see what the is. So the S&P isn't as drastic, but it's still overbought or oversold, right? So what I'm going to do here, if this even remotely pops up above this zone, I'm going to get out of one of these. This is not my normal trading, but this isn't a normal situation, right? You don't, when you see that edge at 84%, you don't want to be, most times, again, the other day, like yesterday, it got to 95%, but that doesn't happen very often. So my point is, if this even remote, I don't need to watch this pop back 40 more points to get out of one of these. I'll hold one and have it officially stop me out based on my rules. But because of the edge, I'm going to hold it. I mean, I'm sorry, I'll get out of one. Otherwise, I mean, I might not have to even worry about it. This could keep going. We'll keep an eye on this, see how drastic this. I usually just look at the S&P because they're obviously pretty similar as far as what's going on, but we'll keep it on NASDAQ. 80%. 81, so 81 stocks out of the 100 are below their 5-minute TAS boxes. Hopefully you guys are understanding that. And I'm telling you, this is probably going to bounce here pretty soon. I'm not saying you're going to get a 200-point bounce, but it's looking, especially after, because it's been selling off all morning anyway. Otherwise, like if you see that edge oversold, you can get out extreme standard deviation. I'm definitely getting out. If we do swipe down to here, I'm 100% out. And then if I get a bullish setup with, see that edge is at 90%, and we get down to this blue lug, this is called confluence. You'll have blue lug, you'll have extreme VWAP standard deviation, minus 2.5 standard deviation. Remember, this is one standard deviation called daily value area, 1.5. That would be 2 standard deviations. I'm sorry, I don't even have 2.5 drawn. But that would be blue lug, extreme standard deviation, edge oversold, that's confluence. I'll turn around, get out, and flip and go long and watch this thing bounce about 100 points. So hopefully we can get down there. But if this bounced right here, it would not surprise me. Why? Edge is oversold. And this is an extreme standard deviation. It's not ridiculously extreme, but it is. And you have these algos that turn around and push it. And then how could you determine if this may bounce right here based on volume? Well, you look at your relative volume, right? So this is your relative volume. This is on Sierra chart. So this is based on exact 5-minute time periods for the last 30 days. So you can see, so 100 is 100%, meaning normal. So for the last 30 days, you can see there's some decent volume coming. It's not crazy like these. It's not 300% 3 times, 2 times, but it's still decent. Where you want to be very, very careful. We talk about this every week too. If you start seeing like 60%, 70%, these algos will turn around and rip it right back. Right. So you want to pay attention to that if you're deciding to get out at an extreme standard deviation. So you can set that up in your trade plan where you say, I won't get out at extreme standard deviation unless I see less than 100% volume, then I'm out at extreme standard deviation, right? And I understand this is sloping, and a lot of times you get what we call in my room a hugger, where it will hug standard deviation, right? So it's not as clear cut as I'm making it sound some days, but some days it's like this instead of sloping, and it will bounce and it won't hug. But when you get you get a trending market, and obviously this is a trending market, then it'll hug it. But it still would not surprise me to see this pop right now because of how oversold we are. I'm hoping it doesn't. I'm still in it. But you see, I can judge where I'm going to get. I mean, I can get out right here, but I'm going to make this market at least get above the stop run zone to get out of one of them. If not, maybe we'll get down to that blue lug straight. That would be delightful. All right, I need a break from talking. Any questions, Bruce?
No, I think we're pretty caught up. Just Jeff is asking if you can briefly show your MBO settings for the subchart.
For which market?
This one's fine. He wants to know, like, I guess, like, you're using a sliding window there.
Yeah, I was looking at sliding. I just went back to reset. Because when you reset, you can just put them together, right? Sliding. Let's see if I can give you an example here. Right, this is not surprising. We're trying to bounce here. Just deciding if I want to get out of one right here and move that stop down, just because I just know these markets, especially at this extreme deviation. Let's see. Let's check out ES Edge. The ES Edge is like near 80%, and I'm going to get out of one here. 1 second, then I'll show my settings. And again, you guys, this thing wasn't available for the public, then it was. They're working on it. I mean, I have access in my room, so you see this is at 75%. So you get access to it in my room. All right, let's see if we can get down here. If not, I'm probably going to pop out of one right now. Like if I see blue bubbles, I'm out. Again, this is helpful. I don't trade off. I also get this too, like with Bookmap newbies. I'm going to get out right there. I don't need to watch this come back 30 points to get out of one. But I'm going to leave my original stop where it should be, right? Again, this is a variation of what I do just because the edge is so oversold. I don't need to see this come back 70 points and stop me out to know that we're pretty due for a bounce here, right?
Copper Ice Iceberg Sell HG 151 contract.
And the other thing too, if you're new to Bookmap, be very careful trading just off of bubbles, right? All this is showing you is the market orders. It doesn't mean in certain areas it's meaningful, right? And you want to know, hey, are there no sellers and there's nothing but buying? But otherwise, that's just like watching the orders transpire and trying to place an order or put a position on. It's not enough to trade off by itself. In certain areas, yeah. Like if we come down to an important area and you just see blue, 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 you probably want to get out of that short, right? So I actually timed that pretty good so far. Let's see if I can find something to complain about real quick. Let's go over to Russell. Hey, look at that. I filled out liquidity. You guys ever see that before? You ever see this routine? It's all day, every day in all these markets, guys. It really helps you when you open up your charts in the morning, you're doing your research, and you're looking at the markets, and you're coming up with your thesis, then go in and say, okay, where is the liquidity, right? A lot of days it's not going to be clear cut. Some days you'll see it you'll see it up here and you'll see it down here. Well, that tells me it's probably going to be more of a range type day. If you open up your thing and you just see huge bands of liquidity, well, and your idea is short to begin with, that just gives you confidence that we're getting down there, and you can use them as targets as well, like we were talking about earlier. All right, so this would have been a huge trade, by the way. I don't know if I mentioned that. Really glad I got up to run downstairs there. Let me show my settings here. Crazy. So I have it at reset. You could go. Let's just look at an area. Let me give you an example here. That was more convoluted. Let's see. Well, let's just look at the stop runs. I mean, it's probably going to look the same, but it's the last stop run that I drew the zone on. Let's look at it in sliding mode. Yeah, this doesn't look as, it shows you the whole area. But I like reset just because it's easier to define the area. A lot of times in sliding, you'll see like, say the stop, it's more icebergs, but say you see the icebergs coming in and it's like sell ice and it goes on for a couple minutes. Well, and the market like does this. Well, and say the first part of it is 100. So if I put it on a reset, you'll see like, so probably confusing here, but so say I'm on ES, right? So my threshold is 500, right? Or sorry, 700 for icebergs. So meaning I don't trade anything less than 700 for the subchart. I need to see at least 700 on here. So say if you have it on sliding, it'll look like this over like 3 minutes. and your zone will be like huge. And it started off here and eventually got to 700. But if I have it on reset, you'll see like it'll look like this. It'll look like 100, and then it'll be like 300, and then you'll see 700, right? And it'll really help you because you want a highly concentrated area, right? So I want, yeah, so sliding mode looks like that, reset looks like this. Well, I can go to the most concentrated area and draw my zone on that versus, and that could be only like 8 points wide versus 20 points wide that incorporated these first two smaller ones. Does that make sense? Even though it could be the same house, and I tell my room this all the time too. Just because, it's a different example here. This is wheat, right? So say you can see this is one house, right? So just because, so say eventually this is 1,000 iceberg in here, right? Over the next 30 minutes. Well, if it touches it and it triggers 100, touches it, triggers 100, 100, and then over 30 minutes, and then the next, so say it does this and it comes back again and it touches 100. Well, 100 lot at this point is not going to stop the market, right? It's going to go right through here. They're done getting their fills. What you want to see is a concentrated area of volume, right? So you just got to be careful. Like that's what I was trying to get at the reset, right? Like if I see, and on the sliding mode, it makes it look like it's one big area, but on the reset, you're going to see this. I want to see the most concentrated area to draw that zone. The same with the on chart. Like you could see, 50, 50, and then 300. Well, 300 is the area that you want to draw, and it's not always going to be a straight line because they could chase it up. So say this chased up,
sell SI 100 contracts.
you'd want to draw. So say it chased up, you see the white line, and then you see 300 pop in. Clear this out, right? So say this goes up here, the market hits it, and then you see a buy iceberg up there, and that's 300. Well, you can draw your zone just based on 300. You don't have to incorporate the first part of the iceberg, right? Because it wasn't big size. That's not concentrated area where traders are technically caught. So hopefully that makes sense, but it just helps you control your zones too. So that's a long explanation. I tried sliding. I used to use sliding. Then I moved to reset, and I've been trying it in the room, and it just, you could go back and forth just to see, but I like the, I'm glad I got out there. I would have been stopped up here, by the way, not that one lot. I like to see the spikes, and it helps you determine your zones easier, so hopefully that was not confusing.
Yeah, just a note on the reset. This is why we came up with the sliding, and it seemed to work pretty well, was that someone would have a different value than Scott, and the reason that this would happen is because a computer clock, makes a big difference, and it might be off slightly. When that happens,
First, I'll be right back.
okay.
I got to let something on my front door.
When that happens, then you'll get a different value, and because it's resetting precisely at a time. So it's just something to be aware of because we all want to look at the same data, but at these kind of sub-second levels, like things can look a little different. We run into this all the time. This kind of activity is just you're very, very different than looking at other platforms that are looking at several minutes of data. Yeah, Jeff, I just use the cumulative volume delta, the sum modes. I look at it very differently than Scott. I look at the I just want to look at the axes are not aligned. I know that, but I don't care because I just want to see the graphical representation and the lines. It's like, okay, well, I know that was significant icebergs compared to other icebergs. And then that allows me to then see the graphical representation and compare that with stops as well on the same, using the same setting, but it'll be a different axis.
All right, I'm back, Bruce.
Okay, the market didn't crash yet.
No, and this is exactly why I got out of one of these, right? I was expecting this based on this edge product that we use in my room. It just helps you. It's still oversold, but not crazy. So that's ES. Let's see what Nasdaq looks like. Yeah, it's still oversold, 77%. I'm just going to keep it on ES because that's what we use in my room. It's a pretty good gauge. I don't need to talk back and forth here, but you know, this thing is very, very likely to go
208 contracts.
stop me out. All right, let's see what's going on in these other markets. Gold's trying to suck me in. We can kind of go over the structure and stuff, the bigger picture of some of these other markets. I was looking at crude. I think I missed a monster trade. I was waiting for that. We were going over that before we started selling off in equities. We can go back over there in a second. But this was obviously 200 less stop run. So, and this is another great thing about this on chart is you can see exactly where it came in, right? Started on that bubble, ended on that bubble, incorporate all the bubbles. There's your zone. That's step one. Step two, see what your ATR is. 26, with the decimal place 26.1. So we just have an idea of how volatile the market is. Bigger picture stuff. We know this market is in a bearish state because of, take this multi-week balance area. We broke down from it, and now we're building balance below balance, right? And then we also tried to break out of this balance twice yesterday, late afternoon. Couldn't do it. Or actually, I'm sorry, this was yesterday morning. Wait, no, I'm thinking about this. This was the first try. And then this was the Fed. Try it again. Selling tail. Did break down. So this did break out and did retest the high volume node. So this is short term. It's looking like it's still bullish, right? But this trumps this little dude, right? So yeah, short term, could this bust out? Yeah, but I want to see this thing get through this high volume node, which is just where the most trade occurred in a balance area. It's got to get through this area for me to actually be at least thinking there's going to be a bigger move to the upside, right? So you just gotta always judge this stuff. The best trades are when everything aligns, right? So this is obviously not aligning. Short term, if I'm looking at this in a vacuum, just tried to break out, came back, held the high volume node, still bullish. That looks bullish. This is bearish. These are the trades that you tend to get this kind of trade. So if you just watch your markets and try to find like the equities, right? It's completely bearish. And then if you get the shorter term stuff, like in the hourly, and you get balance areas that are bearish, those are the best trades. So this is kind of contradicting itself, and that's the definition of gold. The gold market is complete whipsaw, contradicting, back and forth trade. I could see this busting out here into this high volume mode. So we know where we're at. It's short term bullish, longer term bearish. We're day traders. I'm not holding trades for days and weeks, so I will trade. I'm not afraid to trade this to the upside, is what I'm saying right now. And then the determining factor is the volume setup, right? So here's your stop run. Retail trader puke. What's going to happen here? Is it just, and we just talked about this on the other way, Nasdaq, that wasn't real selling, and you see it didn't really follow through. Is this is not real buying. This is, it's buying, but it's just puking. Does that mean it can't go up? No, but the big money, real buyers have to come in behind this to continue this. Other than that, this isn't real buying, and it'll probably reject, right? So we wait to see which way it breaks out of here in ATR to determine if this is a Dumb and Dumber or a stop and hold, one of the two of my 6 setups, right? And then we take a look at the lugs to figure out if I want to be aggressively long or aggressively short, or wait for ATR retest to get in. Whether that happens. This is interesting here, right? I will not short aggressively above the yellow lug unless we're at the red lug. I won't sell aggressively. I won't buy aggressively below the yellow lug unless we're at the blue lug, right? Because this is how powerful these lugs are. It doesn't mean we can't bust through and make new ones, but I just know how powerful they are. And you can see them here. We had it there, held here. We did build new lugs here. But the point is, I will take this short aggressively. If we were here and we got that stop run, I would to go short because we're above the yellow lug. I would wait for a full ATR, 25 ticks, retest failure. But I will go short this setup now because it's at the red lug. And I know we're short-term bullish, but we are longer-term bearish. So I'm okay with shorting this right here too. So what does that mean? It means I will get in aggressively. ATR is 25.6, so I'll go a little outside that. I'm going to go like 28 ticks. So we'll say this is at 50, 58, 30, 59, so 31. 28 ticks below the bottom of this zone. So 31. I will go short. Now, if I get filled on that, I will then put my stop 31 ticks above here. I'm sorry, not 31, 28 ticks above this zone. And I'm just looking here at like, so this is where you want to be careful of liquidity. I don't pay attention. I mean, this has been in here for a little bit. This is liquidity I look at. Be careful playing off of liquidity that just pops in and out of the book. That's just algo screwing with everybody, right? The liquidity you want to watch to determine, hey, where we may be going is this. So this just looks pretty range bound, right? I'm not really paying attention to this, even though I think we could get up there and fill that. Again, that's not like I won't take a short just because I see liquidity up here, right? Even if it was longer term. But just know the likelihood of this filling is very good because the big money gets their way and they'll push it into this. But I technically could still be in this trade. So say I get filled. If I'm going 28 ticks above here, that puts me at 08. Technically, this market could come back, which it most likely will, fill all this liquidity. I never get filled, and then it can turn around and sell off, right? So my point is I don't miss the trade because of liquidity. All right, so we're getting the bounce that I expected. I'm probably already stepped out of this NASDAQ. Hold on.
Wheat stocks to I stop by ZW. 200 contracts.
All right, looks like we're trading grains. Market must have known I was talking about it. This is when I was just showing with giving the iceberg on chart example. So you gotta stop running wheat. Step one, draw your zone. Make sure you incorporate all the prices. I try to use yellow or white for my stop runs, so I know what it is. I don't think I got that right. Yeah, that's right. That's a pretty tight zone too. It's 2 cents. Right? That's step one. Step two. See what your ATR is. You can see right in the middle there, 3.56. So a little over 3. And I round up, so we'll say 3 3/4 points. Let's look at our lugs, see where we're at. Look at the bigger picture. Another market at the red lug. Now look at this one. This is confluent with, so it's a little bit above, but until it draws new lugs, I consider that at the red lug, and that's confluent at the top of this market profile composite. Law of confluence. And I mean, this has been a pretty constricted day, but we are at extreme standard deviation of VWAP too. So you got 3 things in the favor of this possibly failing. Right? Then we go to the bigger picture just to see, you know, am I standing in front of a huge balance area breakout, things like that. That's the stuff you need to know even before you start trading. And I don't obviously for this market because I didn't look at it today. Right? But you need to know where we're at in the bigger picture because this doesn't change every 2 minutes. You can look at it quickly in the morning, the markets you trade. So what does this look like? I was gonna put Bruce on the spot, but I won't. This is balance. This is 2-sided trade. Traders placing bets. This was a breakdown. Did the breakdown work out? Well, if this is truly bearish, many times when markets break down, they will retest the bottom of the balance and then go. High volume node is last stand. This has now gotten through the high volume node. This is a failed breakdown. One of my favorite trades, structure-wise, right? This should do that, right? So now I have conflicting information, right? I just showed you we're at the red lug, we're at the market profile composite.
Sell NQ 174 contracts.
I'll come back to this because I have that position on. I'm stopped. All right, so made a little bit. I traded that correctly, right? Like I did nothing wrong here. I got out of 1 because that edge was oversold, and I was exactly right on that, right? And now this has turned into, as long as we didn't get an ATR below here, which we didn't, we only got about 25 points below here, this isn't officially a Dumb and Dumber setup. So once again, this selling was not real selling. It was guys puking. The big money, if they wanted to drill this thing, they would have stepped in right here and they would have done that. Instead, we did that. So this is an official Dumb and Dumber. So now if this goes retest failure, I could go long this. I wasn't going long aggressively off of this setup, meaning I could have got it stopped out and then flipped long because we're still below the yellow lug. Right? And that's the way I trade to determine if I'm aggressive or not. There's other instances where I will be aggressive, but so you see here, the reason I didn't take that long and flip right away, stop run was here, because we're below the yellow lug. But now if this comes back, it retests this area, that's the stop run, and rejects again, I will go long. And I think we can get a pop back to at least that. We talked about this earlier. The bottom of this composite and or red lug. And then I'll look for that.
Gold stock by GC, 168 contracts.
So of course everything's firing off now. Any questions, Bruce?
Let's take a look.
All right, so what would be ideal here now, because we just, so quickly, bigger picture tells me wheat looks very, very bullish, right? And I said I was conflicted because we're at red lug, we're at the market profile composite, high, that would look bearish. This thing should just rip off the page now. This is a major multi-day failed breakdown through the high volume node. We're up here now, right? So what would be ideal is, we have our volume set up. I want to see, hopefully we build new lugs, so I'm not worried about short or buying into the red lug. That has not happened yet. But we're also outside this now. So we cleared it. So what I would love to see is new lugs built. This turnaround, retest that stop run area, which would be confluent with the top of this, and the new lug and the prior red, and then I would play for a move to the red lug, which I think will happen as soon as we get new lugs. I don't know why this hasn't drawn new lugs yet, but she has her parameters, and there's a reason that's not drawn them yet, so I'll just wait. But as soon as that draws new lugs, I am going to be 100% watching and hoping we retest this zone. You could just go long immediately outside the zone. I just have learned the hard way, it's better off, especially if it's not confluent with a bunch of stuff. You wait for, didn't mean to do that, a retest.
Gold stock by GC, 500 contracts.
All right. Major pukes in gold. So this, obviously, this short idea is disqualified. One, because it got an ATR above this zone. Two, there's new stuff firing off, right? So I didn't jump. I wanted this market to prove that this was a Dumb and Dumber, meaning there's no real buying. There's still not really real buying. These are just stop runs, but that idea is disqualified. Plus, I have a new setup. You can see it right on the sweeps here. Perfect, awesome to draw your zones. There you go. Let's change colors. So I'm not. So like we were talking about, this market does look short-term bullish, long-term bearish.
RTY Iceberg by RT, 150 contracts.
Meaning, I'm fine trading either way right now. I mean, I think this is what's happening. I think the bigger move is going to be down, but currently, broke out, tried to have a failed breakout, held where it should have held, directional conviction. Now I think we're coming up to this high volume node, which is quite a ways away. Could even get up to this 1860. This 1860 you really want to watch. So if this gets rolling, why do you want to watch that? Well, you had directional conviction, selling tail, directional conviction, failure. It did trade through here, but then you can see it built balance, and this is major directional conviction. So if I end up getting long on this stop and hold setup, I will 100% be looking to get out at here, because that's what led to this whole down move. These are why I have to draw my zones. You want to pay attention to those areas. They're very, very important. just need, so there you go. There's your new lugs, right? There's your new lugs. Here we go with the retest of the zone. I'm good to go along this market. As long as we got within 2 ticks of this, which we did. So retest means within 2 ticks, most markets. I say 2 points in NASDAQ, and there we go. So now I can go along this market with, this is like an A+ setup as well. So again, I don't just jump, you could jump in right here, right? You may be saying, well, why do you have to wait for that? Get in right here. Well, just because of my experience of watching thousands of these, because many times I want to see this area hold and reject. This could go like this and right through here, right? So I'm willing to risk the extra couple points to prove this area is solid, right? So once again, ATR 3.90. So I'm going to go 4 points now above here, just outside an ATR. 77.50 is my entry. If I get filled, my stop's going to go 4 points below this. So I'll fill at 67.50 for my stop out. All right, any questions, Bruce? I got to set up a couple other accounts here to trade this.
No, not really. Yeah, just Scott's using the market internals like he was showing earlier for overbought, oversold. But you're basically, I mean, your whole trading plan is revolving around insight from extreme readings on stops and icebergs, and then to look at the setup.
Sound like did you just get smoked on a trade? You sound very depressed all.
Oh yeah, I'm sorry. I'm pretty beat up. I'm pretty tired. We have some new releases, and it's just been a lot of work lately. So some interesting stuff though.
You lost your spunk.
Yeah. So well, I'll be back.
Hold on one second. I'll be right back. All right, sorry guys, my air conditioning guys here. It's not good when your air conditioning goes out in 115-degree weather. So, all right, so along this, there's my stop, 67.25, which is ATR outside of an ATR below there. So there is a little liquidity up here. I will watch this. So say, for instance, that this could be part of your trade plan, right? If we get up this liquidity, which I think we will, and say it fills it and then can't hold above it, you can get out of one as it comes back. You don't have to let it come all the way back and or wait for another setup, right? Depending, I'm saying if nothing else is up here as far as lugs or anything else. Other than that, I fully think we can get to this based on that, what we just looked at, based on this, breaking out of this, I think we can get to this, and that's 30 cents away. And that would be a nice trade. Remember, it's just like S&P points. That's like a 30 S&P point trade. All right, so along that, stopped out of NQ. Well, we made a little bit on that, and then I thought I heard something on my buddy Russell that I missed earlier. This was a costly miss for me. No, nothing major. Surprisingly, really nothing in ES today. Oh, by the way, look where so I wasn't willing to take this trade, but look where this market stopped. Well, let's take a look. Let's take a little peek here.
Gold stock by PC, 195 contracts.
The magical lugs. So again, you guys can find those. Go to our website, ludwiglevels.com. Say you saw it on the Bookmap webinar and she has special pricing for you guys, or my room has special pricing, even better pricing, I think. I don't know what she's doing lately, but that's where you find them. They're saying they're unbelievable, especially if you get the volume setups here. They're ridiculous. So, and this is why I use these as targets, so on and so forth. But I wasn't willing. I had a feeling we can get down here. I just wasn't willing to risk 26 points to make 13. But there's your 13 points, right? And that was right out of that. This was a stop and hold setup that you could have traded. Right? We talked about this at length earlier. That was the stuff. Stop run, white stop run. You could have been in an ATR below there and caught the 13-point move. I just wasn't willing to put on that trade and risk an ATR above here.
Stock by
What is going on in gold, man?
384 contracts.
I think the worst traders on the planet are in gold. All you see in this market are stop runs. Like, you very rarely see ice. It's just stop run, stop run, stop run, stop run. They're all stop and holds. So what you could have done here, right, is you could have been adding. We were at in a vacuum, you could have been adding on each one of these setups, right? But remember, I was waiting for, I'm pretty sure we have new lugs now, but I wasn't willing to go long on that first one. Let's see, we have new lugs. Oh, new lugs yet, wow. We had prior red too, but say in a vacuum, we're not like at the red lug. That's why I didn't want to go long on that first setup. You could be adding and trailing on these setups, right? So traders always have problems like, well, where do I add? How do I trail my stop? Most traders trail their stop on an arbitrary, stupid, I just want to lose back 5 ticks or 5 points, like we talked about earlier. I'm not going to get into that again. But this allows you to trail your stop based on market structure, not on what you want to lose, right? So could have been long. So say there's no red lug there. I get long in ATR, 25 ticks above here. I'm long there. This stop run falls up, fires off. I add another position 25 ticks above here, and then I take the stop that was down here, where I was going to enter the short, but it never happened. Then I move it 25 ticks below this zone. Then this fires off. Now you have 2 positions. So you got long there off of this one. Now, so I'm long 1 position, long 2 positions. Now I can trail the stop up. And then you have the third setup. I could add a third position if it gets above here, but now I can trail the stop. So my stop for this one was 25 ticks. I move that up based on this new one. This one fired off, so then I move my stop for the first one and the second one 25 ticks below this zone. Now this one fired off. Now you can move your stop 25 ticks below this zone. This is how you catch a huge trade, trending market, not risking anything basically. Right, you're just giving back. If I have losing, so say this moves up here and I get long on this third setup, and say I got filled and then it comes back and it stops me out. Well, I lost on this setup, but I made money on this one and on this one. This one probably been scratched, but I made a nice profit on that one. But if it keeps going and you catch a monster move, you have a month or year making day, and you're just trailing your stop based on setups. So hopefully that was clear. All right, I feel like I've been talking for about 4 hours here. Any questions?
No, I've been answering them in YouTube. I think we're all good. Yeah, no, we're okay over here.
Okay. So you can see here too on this edge. See how it pulled back, right? We were oversold. This is why I got out of one of those NASDAQ. And then the market, it's pulled back, it reverted, market ripped. Now, if I got a short signal, I wouldn't be afraid to short it again because this is not oversold anymore. And we're definitely not overbought. We're actually, most of the stocks in the S&P 500, the majority, 40% of them, are in between their TAS boxes. That's all it's telling you. There are many market profiles. So this is part of my room, right? You can see the tick strike. Again, I haven't set up 1 here, so you're seeing every single tick. You don't hear anything. These are all on mute because I would lose my mind. This tick strike, again, there's discounts to all the stuff on my website, guys. Just go on there, guys and girls. This one, I have everything set at 11 because I just want to see serious buying, serious selling. I don't need to see see how Tesla's at 1, Nvidia's at 8, VIX is at 2. I don't need to be seeing that on this one. But on my trade room, this is on one of the voice channels. You can go and look at this at any time, right? Along with the headlines and everything else. All right. I'm really surprised this hasn't made any lugs yet. So quickly back to crude. I was talking about this is upsetting. I think I missed this trade, and I was waiting for this pre-market or before I got on here. You can see, guys, knowing your structure and then knowing your volume, how to trade the volume areas just leads to this is an awesome zone. This zone led to directional conviction. It was also the top of this balance area, comes right down to the exact zone and launches. I was watching. We were up here right at the crude open, and I'm like, keep an eye on this because I need signal down here, and now I'll probably throw up when I bring this over here, because if there's something down here, I'm gonna be very, very, very sad. Be my second missed trade of the day. Hey, look what, also over here, look what got filled. Look at this liquidity. This one didn't get filled, but they pulled it. So please don't be a setup. Please don't be a setup. And there's a setup. So this is why I like the reset mode, right? You can add these two together. They're basically back to back here, all in the same area. So this was not threshold on its own. That was 100. This was not either 126, but these combined are 200. So this is what I would have done if this is right when I was getting on the webinar, when I ran downstairs and ran back up, and this is the RTY trade and this trade. This one hurts bad. That's this. Just want to make sure I got all the prices here. Oh man. Guys, this is what you should be doing. You find really important areas and you just wait like a stalker. You don't miss them like I do. Oh my gosh, this hurts. There you go. Let me see. The only saving grace is if this was below the yellow lug, I would not have gotten in aggressively. And it was. So that makes me happy, as long as it didn't retest fail. Let's see what this was. Oh no, that was definitely a retest. Guys, I mean, it's the same pattern over and over always. Look at this. I feel like someone's kicking me in the stomach right now. And we know the zone, we just looked at it. Here's your volume setup. Here's your ATR, over an ATR. This is over 50 ticks. It was never at 50 ticks until basically now. Retest. Fail. I'd have been in right here. So let's say 111.40. And that's, oh yeah, there you go. There's a 200 tick trade, 240 tick trade. I don't know if you guys are good with that. I wonder where this market's going. Any guesses where we're going? Any guesses? Anyone? I'm gonna say the manipulating houses that run the markets. I'm gonna say this volume that they got filled on all their bids. These are their offers. That's what I'm gonna guess. And it doesn't matter, guys. It doesn't matter what it is. Like, you can come up with scenarios all you want. You're never gonna know. You know, in my head, I say, yeah, they got filled, and here's their offers. You don't know if this is them, but the point is, you don't need to know. You need to know they got their fills. You know there was a volume event. You need to know there's liquidity up here that's been in here all day, and we're very, very likely to get up here. That's what you need to know. Don't confuse yourself. Try and understand what every single volume. Are they getting out? Are they hedging their options? Are they? I don't know. It doesn't matter. This is the area. Here's your retest. Here's your failure. You're long. You make 240 ticks and counting. Like, it's that simple. Like, I know you guys are like, hey, it can't be that simple. You notice I didn't say easy. Trading is not easy, but you can make it simple. And the simpler you make it, the better you're going to do. Say it all day, every day, because that's the way it is. When I made the millions of dollars, I made it as simple as possible. I was just looking at orders coming in the order book. It doesn't get much worse. I didn't even have a chart up. My first 3 years, I did not even have a chart up. I was just trading off a volume. So that just shows you guys, get all the crap off of your charts. Use a couple main things and stop crushing your brain. Make it simple. This thing's going right up here too, which is fine. At least I got this one. That crude one hurts really bad, because I swear I was looking at that right before I got on. Oh well, such is trading. It sucks, but there's a trade right around the corner, right? There's thousands more trades waiting for me. I'll let that work. I'm going to try not to watch that.
RTY Iceberg by RT, 150 contracts.
Good things happen when I don't watch. All right. I'm a little superstitious, as you guys can tell. All right, so this one I'm not going to draw, because I don't draw. Yes, it's spiking. But see how my threshold for RTY for Russell is 150. I won't draw a zone if it's just gets to after two different. I mean, if they're right one after another, then yeah. But so say this was 80, and 2 minutes later, then 60 came in or 70 came in. Yeah, that's threshold, but that's not. I don't want to piece together two disjointed spikes to make my zone, right? But I will do it like you saw in wheat. One was almost threshold by itself, and then another one came in and put it way over threshold. It was like 200 something. Then I'll do it. But if you just get to threshold, I don't usually do it. Unless if it's in a really important area, I'll do it because I already know the area is obviously important. But other than that, so I'm not going to draw that zone. That's what I'm saying. This thing's, we could bounce, but all these markets, guys, I would not be expecting huge moves up today. And if they do, then you got to change your tune. But these markets are in serious, serious trouble. There's a very, very high likelihood we hit this zone today in ES. Right, and then that's when you want to use your spot gamma stuff, the spot gamma areas, and then if you guys go to his website, he talks about it. You can go in here for the commentary, but the areas that he said to watch. 3620 is the next major level. Well, let's see. I will bet that's right in the middle of that zone. Right before it. A little bit before it. But I could see it getting down to the zone today or tomorrow. Tomorrow's option expiration is going to be a really weird trade probably, so we'll see if we get down there today. All right, I think that's about it, because your guy's getting on here now, the other dude, right? Tom guy.
Yeah, he'll segue right into it after this.
So I didn't do anything here in gold, obviously, and I was just waiting for new lugs, and they didn't draw, so, and I'm fine missing this trade, kind of. This doesn't hurt as bad as the Russell one. I don't know why we're not drawing lugs in here. I don't know what the issue is, but, in a vacuum, you can easily trade this setup, traded this setup, added, traded this setup, about to add, and you'd have 3 positions on and catch a major, major move, and you're only basically risking back down to an ATR below the one. So I didn't catch that one. Obviously missed crude. Obviously missed Russell. Did catch the NASDAQ. Didn't do anything. But you can see, hey, look where the market tested and failed. Oh, that would be the volume area. Okay, you guys, learn this stuff. I'm telling you, it's the most powerful thing you can have in your trading. Ever. You can trade off the, like I tell you guys a story all the time. I did, for the month of December, I traded, let's look at it real quick. You guys like seeing this stuff? Month of December, so this is my current P&L, but month of December, I traded this market. It still was a profitable market. This was early January. So you can see that I traded nothing but, in a vacuum, nothing but volume setups. Just in a vacuum, I waited for ATR retest. I didn't have any aggressive entries. Didn't use any lugs. Didn't use any market structure. I just traded. I wanted to show my room. You can trade the setups and just by themselves and still be profitable, right? And then obviously, guys, and this is good to see, right? This is trading. This is what happens when you trade. It's not that. It's that, right? Yeah, you could get lucky and get one of those, but over long terms, you're gonna have drawdowns, right? And it does feel like the end of the world. I've been doing this for 20 plus years, and it sucks. Like, this was a huge drawdown here, right? But you just keep taking your setups. That's what trading is. It's a percentage game. It's not you make money every day like a normal job. So you have to control your risk, and know you're gonna have drawdowns, and know if you have a solid system, like liken it, retrading in the zone. His main point in that book is
by CO. 160 contracts.
His main point in there is you have to treat it just like a casino, right? If you're a casino and a high roller comes in and crushes you one day, do you start changing the rules? Do you change the rules of blackjack or stop offering the game? No, it's math. You have the edge statistically. You just let the hands play out. This is what this is. I know this. I have the strongest edge you can possibly have in trading futures is with the SI indicator. I know this will just keep doing this. Does it mean I won't have drawdowns? Absolutely not. Here's one. Look at this. I actually went negative here in February, right? So I know I have the edge, right? And I also know that I don't have to be some ridiculous odds trader to make money. Look at my winning percentage. Granted, I could get better at this. This is making mistakes, missing trades, blah blah blah. But that's 46%, and 46%, and look at the P&L. And I'm not trading big, guys. I know you guys are looking at, it's only $60,000. Yeah, because I'm trading 2 lots, right? So it's like if I'm trading 20, it's 600,000. If I'm trading 200, it's 6 million, right? So, and everything's scalable too. So as you make money, you can build your size, right? But the point is, you can be a sub 50% trader and be profitable. So all this stuff should be very motivational for you guys if you're not making money right now. right? Especially if you have drawdowns. You're going to have drawdowns. But if you have to feel secure in your system and you have to have an edge, but I'm showing you the edge. I'm not saying trade exactly like me. I'm giving you the components to build your own edge. And the main component you have to have is the SI indicator. Could you trade without it? Yes. Could you make money without it? Yes. Do you have all the information if you're not using it? Absolutely not. So that's what you need to realize. So I like showing you that. I was showing you, month of December, how I traded just the setups. That's what I was getting at there. All right, guys, that was my little rant. I always got to put one in before I go. Not a ton of trading today, so a little bit there. I'm still long this, not really doing anything yet, but I fully expect this. It should do that. And this is quickly, this is what should happen based on what I just showed you, right? So say, for instance, of course, I can't find the market or the chart. Hold on here. So say, for instance, we talked about this at length, right? This is a failed breakdown. We got through that fine. This should do that. If this turns around and does that, yeah, I'm going to lose on my trade, but guess what? The down move is going to be about 4 times that, what I would have made this, right? So this is what trading is. So you play what should happen. If something happens and that shouldn't happen, and I get stopped out, yeah, I'm going to take a loser on that, but guess what? The short is going to be just insane, right? So that's what trading is. You play what should happen. Most of the times it works. If it doesn't, then you get stopped out, you lose, then you turn around and you trade it the other way. So if I get stopped out on this, I will be shorting this with both hands the other way. But in the meantime, this should rip. It's struggling in some of these prior zones, and they're important. I understand that, right? This was selling tail, led to directional conviction, but this one little move does not trump this major balance fail breakdown, right? See what I'm saying? But say I got long down here, and it moved into this, I'd probably get out of one here. But I got long basically right in it, so I'm not getting out right here. I'll watch this zone. This was directional conviction as well, but I'll probably get out of maybe 1 or 2 up there. But other than that, I'm trying to hold this to the red lug that we talked about. Which was quickly, and then I'm out of here. Still can't wait. Lugs and gold. Messenger. She's in my room too, by the way, so you guys ever have problems, you can contact her directly. I think we can get up to 1109. Right? Red lug, which is, hey, look at that. We're right in that zone. So that's what I'll be watching. All right, Bruce, any other questions? If not, I'm out. Bruce, Bueller.
Yeah, sorry. No, we're all caught up.
Okay.
Yeah. Excellent. All right. Well, thank you, Scott, and welcome back. Good to have you back, and we'll catch up with you next Thursday.
Awesome. Thanks, guys. I appreciate it. See you next week.
Okay. All right. Take care.
Thanks.
Bye.